Welcome to the Transparent FX Academy. In this video, I'll speak about gold. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the commitment of traders, so the COT data, which is what the big players and institutions are doing and how they're moving and shifting their orders, which is what you see right here. And by the end of the video, by putting together these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which is in a very strong uptrend. The market has been creating a series of monthly higher highs and higher lows, and all this huge uptrend is fueled by very strong institutional buying. And we will be speaking about this institutional buying in just a few moments when we move to the commitment of traders analysis. But for now, let's keep in mind that clearly the market from a monthly standpoint is still in an uptrend, and at the moment it is in the impulse phase of that uptrend, because as we know, when you're seeing the creation of higher highs and higher lows, that is the definition itself of an uptrend, and you expect after a correction to see a new impulse to the upside, creating a new higher high, which is exactly what the market is currently doing. So let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly standpoint, what we can notice here is that we are in the breakout phase of a triangle formation. In this case, we have in ascending triangle formation. Now, what is in ascending triangle formation? Well, that is when the market is creating equal highs at a specific resistance zone, which in this case is exactly this one here, but at the same time buyers are managing to create higher lows. So you're having equal highs and higher lows, which means that buyers are still in control of that market because they're managing to print higher lows every time. And at some point, what you expect is to see the breakout to the upside, which is exactly what we're currently seeing, a breakout from an ascending trend line pattern here from a weekly standpoint. Let's keep also this in mind and drop down on the daily time frame. Now, from a daily perspective, what we can notice is that clearly the bullish momentum is still very, very strong. The market has just retested previous daily resistance. We can see that here these two previous red candles were the two previous levels of resistance. Now the market has broken above that resistance. So what we know is that previous resistance, once it is broken to the upside, becomes support, and the market has now retested that previous resistance turned support and is currently rejecting it to the upside, which means that all this area here is quite strong support, inside of which there is the possibility to see even more institutional buying. Now, why do I say even more institutional buying? Well, because if we move to the commitment of traders analysis to see what institutions in the market are doing, and we look at the data for gold, what we can see here is that with the last reports, net positions have been increased even more. We went from having 212,000 net positions all the way up now to having 266,000 net positions, with another 2,700 shorts closed just with the last report and 1,900 longs getting opened. This has brought the total longs from an institutional perspective on gold to 326,000 compared to only 60,000 shorts. So institutions have a huge amount of longs compared to shorts. So clearly they are on the bullish side of the gold market, and they were expecting all this uptrend and are still buying into this uptrend. So clearly gold against the USD is quite aggressively positioned to the bullish side from an institutional perspective. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. Now here in the daily time frame, as we have an impulse and correction, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32 50% and 0.618 Fibonacci retracements sitting around this area here, creating a confluence of support and demand area. And when there is a confluence of support and demand, there is an increased probability of seeing even more institutional buying, since already we are seeing institutional buying. So if the market will correct again inside of this demand zone, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a potential rejection to the upside away from the strong demand and support zone. That definitely wouldn't surprise me. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go over to the Transparent FX Trading website, which you find linked in the description. And here you will have the possibility to gain access to all my courses, which range from the very basics of trading to the more advanced topics like building automated trading systems, building a portfolio of strategies, uncorrelated strategies, and much, much more using quantitative finance tools like the Quant Analyzer. So it's really something that you cannot afford to miss. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations, one-on-one mentoring directly with me for any questions you have along the way, the COT data software, which you often see me use here on my YouTube videos. The program is also an all-in-one program, so you gain access to everything immediately, including all my strategies and EAs, and you also gain access to my entertaining trading show in which I share all my trades as they're happening. Here, you will see the presentation of each and every one of my strategies with the full historical backtest and presentations of the rules of the strategy. You also, as we were speaking about, have access to the live trading show. So essentially, every trade that is taken on my live account is automatically shown here in a very entertaining fashion as they're happening. So opened, closed, managed, so you can learn even more. And as you scroll down, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the registration process. So again, I really suggest you go and check it out. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure that you click on the like button to support the channel. Also, any questions you might have, let me know in the comments below. Also, new pairs that you would like me to cover in my next videos. Make sure to also subscribe to the channel so you never miss new updates, and I will see you in my next video.